Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, 5th day of September 2017, and this is the Daily Report for Gold and Silver. Wild action in the marketplace over the long 3-day Labor Day weekend, with gold really clipping up a sizable notch. The net result is that we now have gold at $1334.90, up about $14.50. That is accounting for part of Friday's change also, so it's been collectively added to that. Silver up about 14 cents, just shy of $18 at $17.96, and downside pressure in the US dollar, 92.29. Of course, this weekend, North Korea did test a nuclear underground weapon, and it was a successful test that has certainly ratcheted up the current crisis and conflict in the Asia Peninsula between a war of words to a war of action. There's posturing going on right now. And because of that, we've seen safe haven assets such as gold move up, dollar move down, and equities really moving down hard. Dow Jones Industrial Average down 234 points, down 57 points in the NASDAQ, and 19 points in the Standard & Poor's 500. Traders, as we come off of a 3-day weekend, recent events that occurred over this Labor Day holiday have really ratcheted up the price of gold. Gold currently trading well off the highs of the day, but still closing very strong, currently at $13.44, putting it up about $13 on the day. Now, first, to our trade over this weekend, my attempt at adding to our current position, as well as attempting to position traders that were flat in the market with some sort of an initial position. I want to explain exactly why I kept the stop so tight. The fact of the matter is, with a long 3-day holiday, and especially the fact that we would be closed here for trading, we have seen sophisticated traders on a couple of occasions really slam the market dramatically during a holiday part as it transitioned into London or out of London into New York. And for that reason, I wanted to keep our stop extremely tight. We got in on our second position, and if you had multiple contracts, you have the size of your add-on, but we got in roughly at $13.40. We got out at $13.35, so we took a $5 nick on that trade. For our traders that are currently in a position, we are in at $12.99, market's trading at $12.45, so effectively we've got the differential between $1,200 and $12.39 if you subtract that $5. I will look to add to our current position, as I think that this current move in gold is far from being over, and with the conflict ratcheting up in North Korea, I wouldn't be surprised to see this market run straight for approximately $13.80. That is my current target. On the screen right now, we have a daily chart and our different levels that we are looking at in terms of where we think this market could go. It, of course, has taken out 34, which was our one-to-one relationship, and our high today rests roughly at 1349.70. We have some resistance at 1352. That would be our next level of resistance. We have another minor level of resistance at 1363, and then at 1376 in terms of where we think this market is going. I truly believe that with the environment that we're looking at, we will in fact go to take out last year's high. And of course, last year's high came in right in this area, 1375, 1380. This is the former high to beat. We are now at a new high for the year, and my sense is that we could easily come up to this 1370 before any kind of a strong retracement in the marketplace itself. Therefore, my recommendation is to maintain our current long, maintain our current stop, which is now sitting just below 1321. We will look to effectively add, whether it's on a breakout or on a dip, we will look to add to our position as well as suggest an initial place for reentry for traders that are still flat in the market after being stopped with a very small loss. And traders, it wasn't just gold that exhibited some tremendous moves today as the market reopened following a 3-day weekend. We had tremendous downside pressure in U.S. equities as well as downside pressure in the dollar. We're looking at the daily dollar chart. We can clearly see a downside move today, closing at 92.27. It is a red candle as we move back towards the lows of the day. And traders, U.S. equities were down hard. Dow Jones Industrial Average down about 234 points, trading and closing at 21,753. We can absolutely see that this range has been compressing. We do have a pennant formation that would typically result, once we hit the apex, with a dramatic breakout. So we could see sharp decline in U.S. equities. Traders, in as much as I try to have us effectively add a position to our current long position in at 12.99, I kept the stop very tight. And as I said during the technical study section, the primary reason was I did not want them to slam the market and to take an extended loss on the ad. I do believe that there is still room to the upside. As I said, I'm looking right now at taking out last year's high, and I think that we're looking over time to $1,400 gold, $19 silver, and that within the next couple of months. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.